like as well, my personal experience on the one Ponzi scheme that I invested in, they didn't stop their distributions until the SEC came out. The distributions weren't going back and forth. And if you think of any business in this world, right, earnings fluctuate. There is no such thing as consistent earnings where the earnings should be the exact same amount every single month, because that's not how real life works. There's always an issue. There's always another roof to fix. There's always plumbing issues. There's always something. And the deals that I find that, like, recently wrote a letter to my investors, and one of the things that I cited was, if there is if there's just too much money coming back too early, something is wrong. And there was a couple of investments, and I think we briefly touched on this. There's one investment that recently affected the real estate community because they invested it was an alternative asset. It was not real estate. And what attracted people was that it was a 25% return on capital year one. And one of the things that was really important to get out to investors is that if they are getting back so much money that they could return to the investors 25% in year one, why are they raising capital at that point? Why are they not just getting debt at that point? Because if they're basically producing a 25% return, then just get debt at 12, 15% all day long. So I think it's so important for an investor to understand that high distributions does not necessarily mean an effective investment. I've been in deals that have 4 years that have not had one investment, one distribution, but I sleep sound at night knowing that it's not a Ponzi scheme. Because why would at least the operator is honest enough to say that the business is not operating, so I am not paying out distributions. We're going to try to right the ship. The worst thing you could do is you see the P&L and something is not right, but you're still getting your full distributions.
Thank you.